Imagine setting your investments on autopilot and watching your wealth grow effortlessly. Sounds like a dream, right? But what if I told you that with the right Fidelity Index Funds, you could turn that dream into reality? Whether you're a seasoned investor or just starting out, picking the right index fund can be the difference between an average portfolio and one that truly builds long-term wealth. Stick with me, and I'll break down the best Fidelity Index Funds to invest in right now so you can make the most out of your money. $100,000 could be the seed for a financial empire. Imagine turning that amount into millions, not through risky stock to pick so endless hours of market analysis, but by investing in powerhouse Fidelity Index Funds. In this guide, I'll reveal the top 5 Fidelity Index Funds that could transform your $100,000 into a life-changing fortune. Whether you're looking for steady dividends, explosive growth, or long-term stability, these funds have you covered. Let's dive in. Why index funds? Index funds are a smart choice for investors who want to grow their wealth without the stress of micromanaging their portfolio. They offer diversification, low fees, and exposure to some of the best-performing sectors in the market. With Fidelity's reputation for reliability and performance, these funds are a no-brainer for anyone serious about building wealth. 5. Fidelity MSCI Consumer Staples Index ETF, FSTA. If you're looking for stability, FSTA is your go-to fund. It focuses on consumer staples, companies that provide essential goods like food, beverages, and household products. Think Procter Gamble, Costco, and Coca-Cola. These companies thrive even during economic downturns, making FSTA a safe bet for conservative investors. Dividend yield, 2.39% 10-year dividend growth rate, KGR, 10.7%. Historical performance. During the 2008 financial crisis, FSTA fell by only 15%, while the S&P 500 dropped by 38%. What could your $100,000 become? 10 years, approximately $243,700. 20 years, approximately $681,000. 30 years, 2.34 million. FSTA is perfect for investors like John, who value safety and steady growth. Number 4. Fidelity MSCI Consumer Discretionary Index, ETF, FDIS. For those who want to ride the wave of consumer spending, FDIS is a top pick. This fund invests in companies like Amazon, Tesla, and Home Depot, brands that dominate the non-essential goods market. When the economy is booming, FDIS delivers explosive growth. Dividend yield, 0.76% 10-year dividend growth rate. CAGR, 11.22% historical performance. From 2010 to 2020, the consumer discretionary sector returned an average of 16% annually, outperforming the S&P 500. What could your $100,000 become? 10 years. Approximately $315,900. 20 years. Approximately $995,000. 30 years. 3.13 million. FDIS is ideal for investors who want to capitalize on economic booms and long-term growth. 3. Fidelity MSCI Healthcare Index ETF, FHLC. Healthcare is a sector that never goes out of style. FHLC gives you exposure to industry giants like UnitedHealth Group, Johnson & Johnson, and Eli Lilly. Whether the economy is up or down, people will always need healthcare, making this fund a reliable choice. Dividend yield, 1.26%, 10-year dividend growth rate. CAGR, 16.8%. Historical performance. During the 2008 crisis, FHLC fell by only 22% compared to the S&P 500's 38% drop. What could your $100,000 become? 10 years, approximately $283,300. 20 years, approximately $931,000, 30 years, 3.96 million. FHLC is a must-have for investors seeking a mix of stability and growth. Number 2. Fidelity, NASDAQ Composite Index ETF, ONEQ. If you're bullish on technology, ONEQ is your ticket to the future. This fund tracks the NASDAQ Composite Index, which includes tech giants like Apple, Microsoft, and Nvidia. With a focus on innovation and growth, ONEQ has consistently outperformed other indices. Dividend yield, 0.64%, 10-year dividend growth rate, CAGR, 7.35%. Historical performance, from 2010 to 2020, the NASDAQ returned an average of 17.5% annually. What could your $100,000 become? 10 years, approximately $401,500, 20 years, approximately $1.57 million, 30 years, 6.13 million. ONEQ is perfect for investors who want to bet on the future of technology. Number 1. Fidelity, MSCI Information Technology Index ETF, FTEC. Taking the top spot is FTEC, the ultimate fund for tech enthusiasts. With heavyweights like Apple, Microsoft, and Nvidia making up nearly 50% of the fund, FTech offers concentrated exposure to the fastest-growing sector in the market. Dividend yield, 0.66%, 10-year dividend growth rate. CAGR, 19.08%. Historical performance. FTech has delivered an average annual return of 18.67%, making it one of the best-performing funds on this list. What could your $100,000 become? 10 years, approximately $586,500. 20 years, approximately $4.42 million. 30 years, 20+ million. FTech is the crown jewel of Fidelity's index funds, offering unparalleled growth potential for long-term investors. Investing $100,000 in these Fidelity Index funds could be the smartest financial decision you ever make. Whether you're looking for steady income, explosive growth, or a mix of both, these funds offer something for everyone. The key is to stay disciplined, reinvest your dividends, and let compound interest work its magic over time. Ready to take control of your financial future? Start by researching these funds and considering how they fit into your investment strategy. And if you're looking for more tips on building wealth, subscribe to Idea Flux for weekly insights on investing, personal finance, and more. What's your favorite Fidelity Index fund? Let me know in the comments below.